All right, welcome guys. So I hope you guys have practiced highs, lows, and support resistance. I did see Yasir's screenshots. Cool. So today we hit a stop loss on Euro JPY. I had shared the trade, but I don't think so anyone entered it. It was only me. So took this loss. Now I have entered these two positions. USD CAD almost it's all greater than 1:1 right now. So the main target is this, but I don't know price can continue going down. So I'll update the target. Maybe I'll close it here or I'll see how the momentum it is giving. Based on that, I'll give the target. But the trade is going really good so far. It's a quick 1:1 plus right now. Gold is also moving in direction, but right now I want to see the price to expand from here. If it breaks this easily, then we'll be seeing a greater momentum reaching towards the previous high. So let's begin now. So highs and lows, I'll take the test again. It will be kind of a surprise for you guys. I'll ask questions on it because back to back doing the same thing is not great. For you guys, I'm giving enough time to make sure you rewatch the sessions. It's okay if you have to watch it three times, four times. All you're going to get is a lot of knowledge, right? You will be able to practice. For example, in all my videos, I've been able to draw these lines quick. You should be able to do that too, because it's important when you're making decisions, when you want execution, all that stuff. You need to make sure that you're able to understand highs and lows clearly. What is the higher high? What is the lower low? And then support resistance is important. I had drawn this line on the weekend, right? On Saturday in front of you guys, and you can see that when the candles were moving, it reacted from this area, right? It took rejection, and we expected a moment where price will come up. This was not the exact price I wanted it to come up, but price came up, it took support, and then it went up again, took support, and then it broke the high. That's when we entered. You can see I didn't execute before the candle close. You can see the candle close right here. So I was able to take an entry exactly at this moment. So I have to wait for the candle close. That's the thing. You have to wait for the candle close. You don't need to be in a rush because even 1 minute, I have seen 1 minute retrace the whole candle. 1 minute can retrace your whole 1 hour candle. That's possible. And I have seen that. So eventually you will see that as well if you haven't. So that's the one thing that makes sure always enter around the close. You can take some risk, of course. Sometimes I enter 2 minutes before, but I always see whether the price is expanding or not. If the price is expanding, only then I enter. Because when I was looking at the price was here. When I took the entry, price was expanding, it was pushing up. That's when I thought, let's enter now. Now, let's begin with EMAs. We'll dive a little deeper on the EMAs because you now know support resistance, you now know structures of what is a high, what is a low. Now let's deal with EMA. So I'll actually move to a teaching pair because it has a lot of drawings. I don't want to confuse you guys. All right. So XAUUSD, you can see it moves in a trend, right? When it's creating higher highs, you can see there's a lot of rejections on these EMAs, a lot of rejections. But EMA is just not enough to take a trade. You have to see a lot of historical data. You need to understand price action, all this stuff. So when you're looking at this data, how do you know when the price is going to move up, when the price is going to do something in particular you want it to do? So first of all, when it's Friday, right? When it's Friday, so you can see there's a trade position right here. When it's Friday, you look at this trade, like how the market has performed. What are you expecting? What is the support and resistance? Now, at this point, when the price was on 3766, you can see this was a support area. On the 2 hour time frame, if I go down, you can see the price was reacting exactly from the EMA. And this was not just one time thing. I have seen this on Fridays that price comes down to below 2 hour EMA or around it. And then on Monday, you will see a push above it. So I was catching this price action. I was looking at the history a lot of times and I could see that recently price has been doing this. The 2 hour EMA was respected very nicely. And when Friday, on Thursday and Friday, during this period, you can see this was September. Yeah. During this period on Thursday and Friday, you would see consolidation in the market. Monday, Tuesday, Wednesday, price was moving up. So this is the information you can easily get by looking at price action, right? So that is the base of trading. You have to look at history, what the market has been doing. There are a lot of relative data that you can gather from. You can see that the buyers are stepping in on Monday, Tuesday, Wednesday, and Thursday, Friday. The market consolidates. It consolidates and sits around an EMA. And when it breaks that EMA or continues that EMA, it's giving a greater price action again on Monday, Tuesday, Wednesday. So that's a very simple and easy mindset to trade on, right? There's a good story, there's history you can look out from, and you can catch easy trades. I don't think so much over the trades. Mainly, my decision point is I take only around 5 minutes to analyze a pair. It's that easy. I'm able to take trades. I'm able to be profitable from that 1 hour session on that Saturday. I'm doing that on every Saturday for myself. I've been doing it for more than a year now. Every Saturday, I sit with the charts, I analyze. It's actually less than an hour because I am on a call with you guys. I am trying to explain you things. That's why it's taking 1 hour. It's not even a 30-minute job. Your main job is actually looking at the price action. Monday to Friday, it's very important that you look at price action. You look at what kind of EMAs are respecting. I have taken trades where 15-minute time frame, like there was a retest on 15-minute time frame, the price was continuously moving up. But what happens with 15-minute EMA is even a long wick when there is a news, or maybe it's not in Forex Factory, but some fundamental news came in, you'll see a long wick and then the price losing up in your 15-minute EMA. And at that point, you face a loss. So that's why it's important that you go to 1 hour time frame, 2 hour time frame, 4 hour time frame, daily time frame. Sit on these areas, draw your support and resistance lines. EMA trading is not actually just EMA trading. It's more of trading with all the technical things you have got, all the understanding of price action and all that stuff. So now you can see price whenever comes near daily, it moves up, right? It's never really breaking and continuing towards downside. So what we understand at daily EMA is that whenever in future, when you see price coming to the daily EMA, you can see from year to year, this is 22 April 25, and this is 14 May, around almost a month, 21 days, something like that. Price consolidated. But as soon as it touched this daily EMA, the price moved up. And then it used daily EMA to continue its price action to break out further. So this is the data you need to look for. This is very important that you understand this. Daily EMA, and then what you need to do is you can find a support. Right here, I can see a support, right? Now I go down to lower time frames. Let's mark this. Let's cut this out. Start new. Yeah. Select bar. Let's cut this out. Let's go down to 4 hour time frame. Yeah. So I can see 4 hour is respected very well, and a retouch on the 4 hour EMA is easily continued around this price. Same around here, it did retouch, but consolidation eventually break. It went to the lower side right here. But even if you would have entered this trade, your stop loss would have been around here because this is the low, or maybe around this price. I can see a wick right here. This was your low, and your stop loss would have been around here. So it didn't hit your stop loss at the end. So I can definitely see that price came up on the 4 hour EMA. It is retesting, and I can see the price going up. So what I do next is I look for a breakout above this local resistance and support level. You can see there's price around here rejecting it, around here rejecting it, and again right here rejecting it. So I'll wait for a breakout on this, and right here, you see after the breakout, the price continued very nicely. So what we'll do is there's a breakout. We'll enter a position right around here. And it's okay to enter at 4 hour time frame. It's completely fine that you enter at 4 hour time frame because it doesn't matter how many days it's going to take for a trade. What it matters is that you survive and you become profitable. That's it. Even if you're a scalper and you think that I would do the same strategy on this time frame, but eventually you are not able to become profitable, then it's not worth it at all, right? If the same thing you're able to make money in 1 week, 2 week, it's fine, right? Eventually you'll have a very big prop firm account and you'll make a lot of money. Now let's play this. It's on 7x. Let's do 5x. Let's try to make this around this. So this is just an example. I already knew the price was going to go up. I didn't knew that the price would hit your stop loss or not. But this is how you trade. The EMA is very simple. You have to look at the history, what kind of EMA is getting respected. So there's one new person right here. So I'll just tell you, this is the settings for EMA again. You can add your indicator, the EMA from right here, add your EMA, right? Moving average exponential. And then you can see the settings. It's 50, close, 0, none, 14, 2. Now, let's move down to 2 hour time frame for the same price action. You can see the price definitely respects this a lot, but at this period, you can see there's a lot of price going down, then coming up, then going down. So 2 hour EMA around here, coming up, going down. So what you have to do around this information is you have to look for a period where price breaks out. So Tuesday, I can see the price broke out around here. Right here, it was Thursday. So that information is not valid right now. So what do we do? Is 2 hour EMA getting respected in the recent history? No. So do we use 2 hour EMA? Of course not. What we do is we try to find different EMA. If this period was happening, I would have definitely taken a trade based on 2 hour EMA, and you can see the structures, the global structures. This is not the exact higher high and higher low the way I create, but the price is moving like this, going up, coming up, and then retesting this, and then going up and coming down, retesting this. Now, again, I'll show you something. Wait. Now, right here, the price didn't respect this level so much, but right here it did. Here it didn't. Right here it did. At this level, you can see price moved up from exact this level. Again, price moved up from exact this level. So you have to just look at the chart, you have to see the price action, and you have to try to find out the relation. There might be so much information right here that is hiding right in front of your eyes. You have to catch that. Imagine if you would have catch that right here, you could have taken an entry two times. Price did this, like once price went up, it retested this level, it went up. Second time, price came down again, retested this level, went up. Now I can see the price is coming down here again. I could have easily taken an entry where I can see the price moved up and then there's a breakout right here. There's a breakout right here, and imagine how much TP we could have taken right here. It's as easy as that. You don't have to think so much. All you have to do is your eyes should be able to catch this information as I am able to. And that can happen only when you are spending your time with the charts. If you're able to do that, you will see that history repeats itself a lot of times. And when it is not doing that, you don't need to take an entry. Are you guys able to understand all of this, whatever I'm saying so far? Yeah. So here on XAU USD, you have seen 2 hour EMA respecting, and you could have easily found out so many pairs that respects different kind of EMAs, and you can take your entries based on that simple information. I use EMAs a lot for my stop losses, for my trade management, where how to trail my stop loss, all that stuff. Trailing stop loss is going to be a different session, but EMA is a key part in that. Sometimes EMA is used, sometimes it is not. So EMA is completely its own thing. It's a dynamic support resistance, but when you combine normal support resistance with EMA, or maybe a trend line where the price is moving in a trend, right here, I can definitely see a trend. If I draw a line from here to here, you can see there are highs getting respected, right? Now this one broke out definitely. I'll just copy paste this line again. And there's one going on right here as well. Eventually, the trend moved up, and then from here to here, we could have drawn another trend line like this, because you definitely don't know that this is going to happen or not. But on the third touch, you definitely know that there's a different trend going on. So you draw a trend line like this, then you know what's the low of this area. What is the low price action? Now, here, right here, you can see the price came down to this level, almost didn't hit the level, but again, there's a high from here. That means your trend line is moving around this level. Now, if you put your stop loss around this, that means it's never going to come to this level. When you're trading with the trend, your trend line is an effective stop loss strategy. When you're trading with the trend line, it's an effective stop loss strategy. So how easy these trades could have been throughout your life, throughout this period. Maybe you have been trading in 22 Jan 2025. You could have made easy money just looking at the charts, looking at this price action, understanding what's happening. And you could have made easy money just looking at that this is the low and price is moving up from here, and you can easily catch that trend. And even if you have entered right here, you still get a good risk to reward. This is my stop loss. Price hit around here. I got more than 1:2. That's enough. Now, let's move to a different pair. So each pair, there's going to be a different EMA that is working. Hold on, yeah. There's going to be a different EMA. Let's try USD JPY. I'll remove my drawings. With EMA, again, just the way I said that some support is used to climb and some support is used to reverse from that point. So right here, you can see when the daily touches the EMA, you see a rejection, price move down, but it eventually climbed up and then it was used to climb up again. Right here, the price broke easily. Right here, again, rejection, price moved up and then continued. So it shows that if price is touching daily EMA, we'll definitely see a move to its opposite direction. First, we'll see some rejection and then we'll see some kind of movement down. Now, of course, the price was in a trend and now it has been using this daily EMA to move down. So relation can be changed easily. Daily EMA, price moved down. Again, the trend change was your daily EMA, price moved down. You saw this history. You could have easily used it again to enter this short. And the price movement has been really nice after this. Now you see that on this daily EMA, it's not always respecting. It's not always respecting. So what you do is you wait for other confluences. It's not just daily EMA you want. You want your support, your resistance, and all of this stuff together so that you have stop loss, so that you have other EMA strategies of trading. Now, if we go down to 4-hour time frame, when the price moves up, touches the daily time frame, that means it has broken the 4-hour time frame. Right here, you can see price has not been actually respecting 4-hour EMA so much. Let's do 8-hour EMA. Yeah, I see much better touches on 8-hour EMA. Now, a lot of people never use 8-hour time frame on their charts, but there's a history here. You can see the exact touch. The price touched here, moved up. Price touched here, moved up. From here, it rejected, took some support, moved up. Again, it has been continuing on the line from the 8-hour EMA. Now, when price touched right here on the daily EMA, I can see it is using 8-hour EMA to continue the trend. So I also knew that on daily time frame, price has touched the daily EMA right around here. But it has also been using 8-hour EMA to continue the trend. Now, what I do is when the price touched here, I wait for a break and retest on the 8-hour EMA. Now, you can see the price broke the 8-hour EMA level, retested the level, and eventually there's a better trade right here. Now, if I go down to a lower time frame, of course, I'm not taking entry on 8-hour time frame. Now, if I see this, there's a level right here. The price needs to break this level, right? There's a support resistance, support. Now I move down to 1 hour time frame. I see a clear candle close right here. I can take an easy entry at this level. And you definitely see the price has never came up, never went in the drawdown. The stop loss is nice. It's around 183 pips. That's huge, definitely. And it, of course, took a lot of time to go down till here, but you could have closed around 1 is to 2 or something like that around this level, which is enough. And that is only 4 April and 3 April. So that is 1 day. That is 1 day. And if you would have waited for a longer duration, then in 1 week, it could have been 1 is to 3, 1 is to 4. So that is how you take positions. That is how you take trade. I hope I'm clear so far. Great. Yeah. So that is the thing. Now, what I want from you, you already know some information on the EMA. Find such relations, find such data. What you can do is you don't need to backtest your trades. I never ask people to backtest your trades. What I want from you instead is do it like mathematics. When we were kids, what we used to do, I specifically, I never practiced math so much. What I did was I went down to my target books. It was having all the solved problems. I always used to look at them, check what kind of formula it is using, and understand what was the question, how it's solving that problem. And that's how I used to do it. So do the exact same thing. Go back in time on your trading view. I'll just move this a little bit. Yeah. So right here, you can replay your charts, go back in time, try to find relations between different time frames, and share screenshots on the group on the general section. Last screenshots only Yasir has sent me. So I want you guys to also do that for this AMA specifically because this is going to change your life. This is going to make your trades better. Very soon, you will be able to take these trades by your own selves. You'll be able to analyze some pairs by yourselves, right? So if you want to do that, first you need to understand how things are happening on a particular pair. Each pair is different, each pair is doing something else. Just choose your own pairs. It's fine if it's commodity, it's fine if it's cryptocurrency, anything. Because all of this strategy works even in stock market, even on this forex pairs, commodity, everywhere. So do that, find these relations and share with me what kind of relation you have found on each pair, why it was happening. Like, answer these questions. Which EMA was respected? Is there a day particular strategy? As I told you on gold, I was seeing that Monday, Tuesday, Wednesday, price is moving up. Thursday, Friday, price was consolidating in the last year around September to December, right? So you can find these relations, you can share that ideas with me, and I'll be able to look at them. If there's something wrong, I can help you guys. So I hope this is clear. Do you have any questions on EMA? So the question is, how much history is enough to look into it? The answer is that you need to find recent history, recent relations, because sometimes the EMA doesn't respect what it has been doing a year ago. Things change a lot of times. A lot of times, every month or two, you will see there's different kind of relationship building. As I told you, on gold Monday, Tuesday, Wednesday thing, that's not happening right now. Sometimes I see on Thursday, Friday's market is just moving up. Thursday, Friday's market is just dropping smoothly, not consolidating at all. So that relation is gone now. That was happening once, now it's not happening. So on the EMA basis as well, if you have been looking at my trades since November, December, you can see I was trading gold based on EMA. Right now, I'm not trading gold based on EMA. It's just based on support, resistance, and price action right now. So strategy changes based on what market is showing you right now. Any more questions? All right. So make sure tomorrow or maybe day after tomorrow before this next session, I want you guys to share the ideas you have found. As much as you can. You need to look at price action a lot because it takes a lot of time to understand relations, the history. All the traders, all the swing traders I have seen, what they do is they look at price based on what it has done recently, And sometimes if the ideas align with a history back in 2012 or something like that, then it's different story. But support and resistance levels, those kind of things align with history, which is like a year back or maybe 10 years back, because support and resistance rarely changes. Psychological level rarely changes. Now, there's psychological level as well. I haven't gotten to that so far. For example, right here on this 149 level, you can see there's some kind of support happening. I have marked this as 0.47, but actual psychological level right here is this 149. When prices like this 149, 149.5, 150, these prices are major support and resistance levels. Now, of course, compared to 149, 150 is a much better and stronger resistance or support level, because you will see a lot of buyers and sellers coming in around this area. Right here, if I mark this level and I say 150, now you can see the price right here consolidated so much between 149 and 150. It has acted as support, it has acted as resistance. So such strong levels, let's say a price, if 5 rupees, 10 rupees, there's a very simple strategy behind it. Let's say if you're trying to buy something, you definitely try to buy around a round level. Let's say if I am looking to buy gold, right? Now what I say is I want to buy gold, a physical gold, when the price comes down to maybe 90,000 rupees, right? Or maybe $5,000, something like that. When the price comes to $5,000, I'll buy gold. I never say like when price comes to $5,003, only then I'll buy. That $3 doesn't have a psychological value, but that $5,000 has much better psychological value, and majority of humans think exactly like that. So that's why 5050, 5100, 5500, all of these levels are stronger resistance and support levels. You will see a lot of buyers and sellers stepping in around this area. Yeah, of course. A lot of people they put buy limit, sell limit around these levels. That's what they do. And there's a whole lot of different things that's happening when you put an order. But these levels are very important. So when you're putting a target, when you're putting a stop loss, always consider these psychological levels. For example, in my recent trades, you have seen in one of these positions, I never use 145 kind of a thing. What I do is instead my stop loss is around 144.79 or maybe 85, something like that. It's never the round psychological level, because I know if price has to take liquidity, it can definitely come to that psychological round level value, and it will take that entry, it will hit my stop loss and then continue in direction. So that's why these psychological levels matter. Now, please share screenshots with me on the group and rewatch the sessions. Rewatch the sessions. It's going to help you a lot. We are going to do trend lines in the next session, trend lines based entry. I'll go deeper in other pairs as well, where you're able to create your own trend lines. I just don't like smaller time frame trend lines. There are a lot of trend lines you can draw in 15 minutes, but also that means the price can easily reverse from that time frame because it's 15 minute. But imagine if there's a trend happening on a daily time frame, is it easy to reverse? It's very difficult, right? Because there's a trend going on a daily time frame, and you have a higher limit, you have a lower limit. That means it's going to continue for a very long duration. And by the time you manage your stop loss, you'll probably have a break even rather than hitting your stop loss on that trade. So make sure you practice on the higher time frames. Bring me back the relations. Is there any more questions? Great. So I'll see you guys on Wednesday in the next session. I hope this was clear, and make sure you watch all the sessions. Make sure you do as many times as it is required for you guys to understand. You should be able to draw everything very smoothly. See you guys. Bye.